The action in gold, I have to say, was quite puzzling for a lot of investors.
It was, and I was just curious because I know you watch gold very closely, but you know, you've heard so many stories, you've read so many stories of people who've gotten on the wrong side of gold. Very famous hedge fund managers, John Paulson being one of them, of course, who have been bullish on gold, right? Because they felt like the inflation picture with the Fed about, you know, clearly on the path to raising interest rates, that you would want to be long gold. So I was really curious, Alex, when I was off, you know, I was glued to the markets. I was watching you and Bloomberg Television, and I was curious whether gold was going to rise with this 1,000-point fall in the Dow. And as we saw last week, no, in fact, it actually fell, which, you know, is essentially, it's a sign of a couple of things, right? One may be that it's not inflation. That's the worry still, right? It's deflation. And number two, even if the Fed raises rates, they're only going to raise rates by maybe 25 basis points and be one and done, and that's it.
100%. And you make a great point about the inflation picture, is that what moves gold is not the interest rate, it's the real interest rate. So that's the interest rate minus inflation. So if that's positive, like it is in China, for example, where deflation might be more of a concern, why are you going to buy gold as a protection of your wealth? And here we haven't really seen a huge decline. We still have negative real interest rates, but with the Fed on the path to raising, then they're going to get less negative. So that is the concern. That fundamentally is the reason why gold is not as appealing.
Right. And, you know, there are investors out there who would never, ever touch gold anyway. I mean, they don't believe that it is a proper safe haven. I mean, Warren Buffett is one of them who doesn't believe in buying gold, right? You can
you can't do anything. You can't eat it.
You can't
put
exactly.
it on a burger.
You just hold it. Right. What's interesting is seeing some of the ETFs that track the price of gold. They've seen money flow out net. In fact, I think it's down about 13% over the past 12 months. But the longs in gold, interestingly enough, have gone up. So people were positioned thinking, like me last week, okay, maybe we'll finally see gold, not get out of this bear market, but maybe rebound, and it didn't happen.
And I should point out that in the last rate hike cycle, so 2004, 2005, we did see gold actually increase 45% despite the rate hike.
Yes.
But there was higher inflation and a weaker dollar, neither of which we're seeing right now.